All right. Carrot Man, how are you?
Pretty good. Thanks for having me. Good to see you again.
How's life in the world of carrots and vegetables?
It's pretty good. I've been drinking, stay hydrated, a lot of carrot juice. So it's all good.
Avoiding those damn rabbits.
yeah, as well. Yeah, so no, but you've been doing great. I really love what you've all been doing, like cheat code, the football club. It's just been amazing to follow, really.
Thank you, brother.
An inspiration.
Are you going to come to cheat code in April?
The next one in Bedford?
Yeah,
I would love to. If you have me, I'll gladly be there.
Dress you up as a carrot getting out on stage.
Then maybe I should consider putting a real carrot suit.
Yeah, we'll get you one. But Danny, how you doing, man? It must be late there in Australia.
Good. It is late here in Australia. I saw you dressed as a carrot in Prague.
Yeah, well, So actually, I had a panel with Jack Mahlers and Alan Farrington and Mark Friedrich, and it felt a bit strange to go on a panel and then sit there, the only one being masked. But yeah, I'm glad I keep my privacy, because you see the messages come, again on Twitter now, people, they literally go physically to people's houses and try to get their Bitcoin. And so it's, it's good to be careful.
Dude, did you see that thing Lot posted about it?
Yeah, exactly. That's what I was talking about. Yeah, that's crazy. So
is this a new thing, or is this him getting swatted?
No, this is a new thing. Let me get you up. It's nuts, man. So it was like almost like its own crime syndicate. Here we go. Where is it?
Yeah.
Right. As expected, criminals are exploring the return on investment of physically targeting Bitcoin holders. I'm seeing more organized gang activity in this sector. Stay frosty. So a federal jury in Greensboro, North Carolina, convicted a Florida man today for his lead role in an international conspiracy to break into U.S. citizens' homes, violently kidnap and assault them, and steal their Bitcoin and other cryptocurrency. Mm-hmm. According to court documents and evidence presented at trial, Remy St. Felix, 24, of West Palm Beach, was a leader of a robbery crew that targeted cryptocurrency owners through violent home invasions. Between September 2022 and July 23, St. Felix helped to plan and orchestrate a series of robberies in Durham, North Carolina, Florida, Texas, and New York. Victims from St. Felix's home invasions were kidnapped in their own homes and told to access and drain their cryptocurrency accounts. St. Felix and his co-conspirators targeted victims across the United States for brutal home invasions, kidnappings, and robberies in order to steal cryptocurrency. So, it's full on. The only thing is you hear about this, but strangely don't know of anyone that we know who's been targeted, which kind of feel like the easy targets.
I've definitely heard some cases, also in the Netherlands. And so it's something to think about, I was careful from the beginning, and mainly because I lived in Mexico as well for some time. And I lived in many places before. So I knew the risk there. And so because I believe in Bitcoin with the 100x upside, I think it's just really important to stay anonymous. And it keeps me sane as well, to be honest. At a conference, now in Prague again, I just kind of infiltrate with the plebs. They have no idea who I am. And, kind of keeps me level-headed, so I also kind of, I like it.
Excellent. Well, listen, look, last time we spoke back in March, Bitcoin was around 65,000. 4 months later, we're at about 65,000. Well, we're a bit below it now, but we were. So, what's going on, man? Just give us the fucking spiral chart. It's just where the fuck we're at.
Yeah, we can actually start off with that one.
Yeah, it's the best chart in Bitcoin.
This one's cool as well. It's been updated, Pete.
Ooh. Oh no, it's a little video now. Come on, sexy beast.
Yeah, so I've been kind of improving my spiral chart skills, and been animating it, and actually also. So I started off with this, where we just see, I think everyone is familiar by now with the spiral chart. So a rotation in the circle starting at the top represents the period of 4 years, and then each ring is on log scale. So we go times 10, And so what I've been trying to add here now is I've actually been trying to make it 3D. And so if we look at the spiral chart now, we got actually the third axis, which is Bitcoin's hash rate. And so we actually see not only money flowing into Bitcoin, which is like represented by the price spiraling outwards. We now also see it spiraling upwards, which is the energy flowing into Bitcoin. By looking at the hash rate, and so we're currently around 500 exahashes per second, and so I think it's this is like a pretty cool to add like a new dimension to Bitcoin. So first shown here at what Bitcoin did to 3D spiral chart.
How proud are you of this spiral chart?
Yeah, I've been putting quite some work into it. It's not easy to make these animations, but
it's very cool.
Yeah.
Do you talk to Wicked much?
Yeah, I've had some contact with him before. I've had some calls with him, and because he also likes to do these animations. We actually had talks before he got really into these animations, and so yeah, he's a really cool guy.
He's very cool.
I love what he does. Yeah.
His charts are very cool. Every time he DMs me a chart, I'm like instant retweet.
yeah. No, his charts are pretty good. Yeah, we continue in the presentation. We continue with the spiral chart as well.
So anyone listening who's not watching the YouTube, we're at the famous root spiral chart. Each concentric circle essentially is a 4-year period. So
exactly.
And you color code them. So it's kind of like green when it gets to a darker green as the price is going up. And what are the red bits? Is that below a certain point?
So this is actually based on on-chain data. We can look at, actually we use the short-term holder cost basis. So the average purchase price of people that have only been a short time in the market. And, if we look at standard deviations below that cost basis or above. And so we can actually identify these periods where we have bull markets, bear markets. So see the first quadrant, which is now color, which is this blue color, we see that we have really these bull markets. Because if we look at the Bitcoin 4-year cycle, we can basically divide it into 3 stages, which is the bull market. And if you put up the next slide, so we get the bear market, and so that's a year here. This the blue period represents a year, and then we get basically 2 years of recovery, which is on the left side of that spiral now. And so we've been really spot on in the 4-year cycle, except for maybe one anomaly, which was we made an all-time high before the halving.
That's the ETFs, right?
That's the ETFs, yeah. So we had a clear catalyst to point to the ETFs. And it's not only the ETFs, it's also really because we had a distribution top in 2021. It's easier to break to a new all-time high, right? If we would have had a blow-off top or so in 2021, we would not be at an all-time high yet. But since we had kind of a muted top, and I think the reason is, there are actually a couple of reasons why we had a muted top in 2021. One of them is, that Bitcoin was at its most abundant stage in terms of supply, and we'll get to that later. And another one is that Bitcoin. We saw. I think the gateways were not really open in 2021. So institutional adoption was not that easy. We cannot really expect from the traditional financial system from all these institutions to immediately get self-custody and start looking into buying Bitcoin from exchanges and so forth. And so the ETF spot approval this time really opened this new gateway. And so I think the last cycle, since we didn't really have yet much institutional adoption, only like a handful of companies, right? I think also that top was a bit more muted. And so there are really a couple reasons why it was muted, but that's why I also think we broke to an all-time high more easily now with ETF approval.
Yeah, it's voodoo how it keeps playing out the same.
Yeah, so what I did in this spiral chart which I think it's important to mention. So this is based on the Wall Street cheat sheet, right? We covered this chart in our last show a couple months back, which then I did an animated version of this chart. But I just want to get back to it, because I think we're now in the calm phase, right? Everyone is waiting for confirmation. We just arrived at this calm phase, and it feels a bit like we could be at complacency. So in the bear market, because people obviously always have a bit of doubt, when you're waiting literally for confirmation of a continuation of that bull market. And so it can feel that we are at the complacency phase. But if we look at the mapping of all these psychological stages onto the 4-year cycle, we're really in that calm phase. And I still think, the psychology has been spot on, because we really did get hope with ETFs. There was doubt. So the stages before we got now to this calm phase were doubt and hope, and so we really did have doubt before the ETF approval, so many people thought, like, are the ETFs priced in? Yes or no? There were all these doubts. And then even when we had the ETF approval and we initially saw a bit of a crash, people were like, see, this is not working. And so, then we really got hope with the inflows of the ETFs, and so I think everyone got optimistic, but we didn't really get a continuation, and that was. To be honest, I was doubting as well. We saw so many inflows, 10,000 coins a day of inflows, and so we didn't really know if it was retail institutions who was behind it and how long it was going to take. And so obviously everyone was optimistic, and it could have been really a continuation of the bull market, but then they faded away. And I've been tracking that as well, and we realized okay, this was a hype phase around just ETFs. It was these initial inflows, people that were interested from the beginning, but I do see it as a very positive sign, because we had one of the best ETF launches. We literally have state pension funds allocating to Bitcoin, and so their track record is actually going to start now. It's going to be part of their portfolio, and maybe only as a 0.1% of a portfolio, but it doesn't matter. People are getting their feet wet. Eventually, that 0.1% will suddenly be 1% of the portfolio, with Bitcoin's upside. And so then they're going to be incentivized to study it better, and maybe also look into alternative solutions besides ETFs, right? Maybe do self-custody or multi-sig custody setups. And so I'm optimistic. Obviously, these things take time to develop, but we literally, the basis is there, right? The gateways are open. We actually see institutional interest, and so to me, it's now more of a waiting game, and we shouldn't get too bored. And we're literally in the calm phase. It's like the calm before the storm. And so I think everyone needs to remain patient at this stage.
Okay, so despite being in the calm phase, how optimistic are you?
Yeah, I still think that we will get a continuation of the bull market, but I also like to take it as it comes. I've made some calls before around okay, we could get to 200K Bitcoin, but I prefer to stay conservative and look at it from a day-to-day basis. I think that's also mostly the strength of on-chain. So, there's, again, these models are getting popular. I don't know if you've seen the power law model, for example, a million Bitcoin by 2030. And that's still relatively conservative, I guess. There's the stock to flow model, which is a lot more optimistic. But I'm not such a fan of. I have nothing against the power law model. I think it's a great model, by the way. It really does well on this historic data, and it's a rather conservative estimate of where Bitcoin is going. But personally, I don't really need those models. I believe Bitcoin is going to go eventually to $1 million as well without the model, and so I rather look at it on a day-to-day basis with on-chain analysis and see where we're at in the cycle. Are we close to peak? Yes or no? And how much further can we go in this cycle? And I think so. I still think we're going to see a continuation, and I expect at least prices above 140K this cycle. But yeah, we'll see.
We'll take 140.
It would not be bad, right? I think many people think that's pessimistic, but
I think many would say that's pessimistic. But
yeah, but I think it's a reasonable price target. I mean, that's kind of my most conservative estimate. If we and we'll get to some of those models later where I base that estimate on. But I think we can still get higher, but we can also have something ruin it, right? We could get a recession. The macro landscape doesn't look that great, and so we still need to be careful. That could actually ruin the 4-year cycle even, because I do think there's a relatively high correlation with the stock market. And so if the stock market would crash suddenly because of recessionary environments, I think Bitcoin will go along with it. Although I still remain optimistic because Bitcoin is a hedge, right? Like I think we would bottom early, but yeah, it's hard to think about these scenarios. We don't really know what's coming. People have been expecting a recession for a long time, and it hasn't come. And in the meantime, stock market is an all-time high, and so I have no reason to be pessimistic at this point. And actually, if we look at the spiral chart, so in the next 6 months, we'll reach the top of that chart again. And so, yeah, we should get at least above prices of 70K. Otherwise, the lines will cross, which maybe is a possibility as well, right? Like if we have diminishing returns over time, I mean, the lines of the spiral chart could cross. I've actually said this years back already, like that is a possibility. But yeah, now we have the 3D spiral, right? So even if the lines cross in the 2D version, in the 3D, the hash rate is likely higher, and we still don't cross. So
yeah, the lines crossing feel like I don't know, like it opens the gates to hell.
Yeah, it would not be a good look, but I mean, I think we've really reached a new stage of Bitcoin. So I see the early days, and we'll also get to another chart. But so I really think of the first 3 cycles more as like the initialization phase of Bitcoin, and then since we have gotten to a more mature phase, and so we're now recognized as an institutional grade asset. We're above $1 trillion market cap. The inflation rate is below that of gold, and so there are all these positive signs, but now we need like time for institutional interest, because the track record from these institutions is only starting now. They're not going to look at the historic performance as much of Bitcoin, or maybe they will a little bit, but they will not have the same expectations. Now it's just going to be like a small allocation. It's going to be part of a portfolio, as a hedge kind of to diversify. But then Bitcoin is going to do Bitcoin things. And so, that percentage of the portfolio is starting to increase, and people are going to be incentivized to learn about it. And so these things with institutions take time, right? And I think now also, it's summer, it's nice weather outside. And so many people are on vacation. And so it's not that strange. Maybe the continuation of the bull market will not start until September.
Yeah, it's weird. Weird thinking the top might be another 18 months away from now.
Yeah, if we look at the 4-year cycle, that's indeed the case, right? So so there's still time is on our side. I mean, we still literally we can go sideways for another 6 months, and we would still be on track in the 4-year cycle. And but I think after the summer, we might see another all-time high, and that will serve as this confirmation, like, oh, it's not done. And I think people will get optimistic again. And what we've also seen, and we can maybe go to the next charts. If we look at ETF flows, we have now seen some more substantial outflows, and we have to realize, okay, actually the ETF flows were 80% retail, 20% institutions, and so obviously they're also affected by the market dynamics, right? So if the Bitcoin price doesn't do well, we will also see outflows in those ETFs. And we have seen 2,000 Bitcoin per day outflows in the last weeks a bit, but it's again stabilizing a little bit. So I still remain optimistic because if we maybe go to the next chart, we can actually see the growth rate of those ETFs, because I still think the ETFs are a really important driver of the bull market. So we see actually that we are at like 2.1 K average flows, the average flow, the average inflow. And so that is still 4 times as much as the new supply issuance, right?
Yeah, so since the halving, because the 2.1K average per day since they launched is great, but apart from that recent spike, it seems a little bit more neutral.
Yeah, so we had a lot of initial flows, and we actually got to an average of like 4K Bitcoin per day in that beginning. But obviously, this is very little data, and so now that has trended down to 2K per day, and it could even trend lower. I mean, even we can go to 1,000 Bitcoin per day. That wouldn't be out of the ordinary. But I still think we will remain above the supply issuance, which is only 450 Bitcoin per day.
But what about the futures market in that? Because like Checkmate talks a lot about the cash and carry trade, where they're just shorting on the futures market.
Yeah. So I don't look at as much on futures as Checkmate does, but the cash and carry trade, because we have this. Because there's a 10% spread or so, or there was, it's already less now. People are incentivized. It's literally the arbitrage to get the futures market to get to the same spot price of Bitcoin. And so the cash and carry trade, it works for a while, but then the price obviously gets more similar to the spot price, and so the spread becomes smaller. But people want to capture that spread. And so therefore they do this cash and carry trade. But in reality, this effect is relatively neutral on the markets, in my opinion. So I don't see the futures market. Obviously, I mean, you can. There is the discussion of paper Bitcoin on in the futures market with USD. You can basically gamble on Bitcoin, right? You can either short or go long without any underlying real Bitcoin, and so that could be seen as paper Bitcoin on top of Bitcoin. But overall, I think that is still it's the size is not that big at the moment. At times it's a little bigger than at other times, obviously, and it has more of an effect. And we actually recently had this 10% spread, between the futures price and the Bitcoin spot price, and so that at those moments it has a bit more effect. But once that closes, then we're back to just the normal market dynamics.
Interesting. Okay.
Yeah, so in this chart, we actually see the total holdings of Bitcoin. So we went from the launch from 600,000 to around 850,000 Bitcoin that are now on the balance sheet of these ETFs, or the combined holdings of all these ETFs. And if you count also the global ETFs, like the Canadians, the Brazilian ETF, or some of the European ETPs, you get to around 1 million coins that are now in custody of these ETFs. So that is quite substantial. And it's, of course, a bit of a honeypot, because a lot of those coins are at Coinbase custody. And so that remains a bit of a risk. What I hope for, and what I've also advocated for in the panel in Prague, was that I hope we see these ETFs come with also custody solutions at some point. We have had that actually with gold ETFs in the past, and so it is possible. It's definitely possible with Bitcoin. We could have like these multi-sig custody solutions for these ETFs, and it could be even like a competitive advantage, right, over other ETFs. And so, since we have some crypto-focused ETFs like Bitwise, it wouldn't be strange to think that they come with these kind of solutions, tools to also get a competitive advantage over the other ETFs.
Yeah, it's interesting that Grayscale's essentially halved in size.
Yeah, so we've seen a lot of outflows of Grayscale since the beginning, and that was obviously due to these high fees that they were maintaining. But if you look at it in dollar terms, they actually kind of remained on a similar dollar position in size. And my reasoning has been also that Grayscale wasn't in the best economic situation, and so they kept those high fees because obviously that was a big part of their income. And so. But now, BlackRock has taken over. So as we can see, it actually goes from BlackRock, Grayscale, Fidelity. It goes by size. And so BlackRock now has over 300K coins. And so I think Grayscale will even fall behind Fidelity at some point in the future, but it might still take some time.
Yeah, that's such a fascinating chart to see that growth, because it's so weird to watch Grayscale shrink and everything else grow at the same time.
Yeah. So it was really mainly, I guess, due to fees. So if you chart like a 2% fee instead of like a 0.2% fee, people are obviously more likely to go to the other ETFs.
The decision makes sense to them, though. They're better off getting 2% on 300,000 than 0.2% on 600,000.
Exactly. And so I think they were economically incentivized. And as long as their dollar flows were kind of stable, it kept the company going. And so, I think that was the big reason. So I think at some point they will lower their fees, or they're actually looking into an alternative product with lower fees and still keep those high percentage fees, for as long as they can. Obviously, it's a lot of inflow.
People are also trapped there because of like the potential of having to pay capital gains tax on whatever they sold to move elsewhere.
Exactly.
Like, it's not like you could do an in-kind swap.
Yeah. So, I mean, what would you do if you've had all that income and you were so used to it and so dependent on it as a company? And then, and people are kind of trapped in there. I mean, I guess you would keep it going as long as you can. And so at some point, maybe economically, it's not interesting anymore. But for now, it still is. So, what I wanted to get into now was the Bitcoin cycles, because I think it's a good idea to explain a bit more. I've looked into these cycles probably more than anybody, and so I aligned them here just to have an overview. But basically, we go from most optimistic alignment to most conservative alignment. So from previous all-time high to halving cycle to 4-year cycle, and so from optimistic to more conservative. But then I wanted to go through these one by one. Because obviously we had a new all-time high, and in the past when we reached an all-time high, we always had a bull market. It was always followed by a bull market, and so. The problem with cycle analysis, so Bitcoin moves in these cycles, and it's really cool to compare these cycles. But what is the best alignment, right? Like, so we can basically take any arbitrary point in time and try to align them. And so the question is, what is the best alignment? What should we do there? And so historically, as I said, so when we would get an all-time high, it would be followed by a bull market, and so it makes sense that once you reach the all-time high, to then look at the cycles, like starting from that all-time high position. But this time, as I said, we had a muted top in 2021, and so we made this all-time high due to this ETF catalyst. But we're actually 6 months early, at least in the 4-year cycle, and so in this particular case, it is clear that the alignment from previous all-time high is not the best alignment, because if you look at the red line there, which is the current cycle, we already fell below all of the other cycle, and we've basically been consolidating for a long time. And so it was also clear to me, because I also thought when we got that first all-time high that we could get a real continuation of the bull market, but then the flow stopped, which why I was tracking the flows. And we saw this consolidation appear. And then when it started taking a little longer, I already informed my followers, like, okay, this is not the best chart to be looking at, because it seems, we're going to this is going to take a long time, and it's not the best alignment currently. And so in our last show, we also talked about the ETF approval and the halving cycle. So basically, because this cycle, the ETF was a bigger catalyst than the halving, we could also choose to align the cycles by the halving for all previous cycles, but then for this cycle, take the ETF approval, and then we got that image that you see there. So the ETF approval plus halving cycle alignment, and we're still more or less on track there. But yeah, I still think that maybe the 4-year cycle is still the best alignment to look at momentarily. And so the next alignment is actually the halving cycle. And so we just take the halvings for each cycle, which is a very famous alignment that I'm sure most have seen on Twitter. But in the 4-year cycle, we really can see that all bull markets align. And the cool thing about the 4-year cycle is also that it incorporates a bit of seasonality. So, because the summers fall in the same place, and so you get the seasonality in there as well. And therefore, I think the 4-year cycle, also the last cycle in 2020, many people were calling for lengthening cycles, super cycles, all kinds of things. But eventually, we just fell back in the 4-year cycle. And so the 4-year cycle has always remained stable, and it seems that it is doing that now again. And by the way, for the so we mainly talked now about the horizontal alignment, but for the vertical alignment, we can also if we take any arbitrary point, for example, if we would take the COVID crash as a starting point, then you have a significant drop at that time. And so if you then try to compare the percentage gains of each cycle, you get a bit of a skewed result.
Yeah.
And so therefore, I like to use the realized price, so which is the average purchase price of Bitcoin, which are those dotted lines. And you see them for each cycle, they're colored in the same color. So that is the average purchase price of Bitcoin. And I think that's a better tool to use as a vertical alignment, because then it strips away some of that volatility. And so we can also see by using that alignment that we were definitely overvalued due to the ETFs. If we look at this chart, we can see that we're higher above that dotted line than each previous cycle. And that was obviously because we had this catalyst, we had the ETFs. And so now we're kind of falling back into the regular 4-year cycle pattern. And therefore, I think it's not strange to have a longer than usual consolidation.
Yeah, and on all of these charts, the 2021 just looks like an anomaly, and it just feels like that massive market crash where we had 3RS Capital, Luna. There was so much selling pressure. It feels like it destroyed a proper bull market.
I think, that's the cool thing about Bitcoin, right? We got like a proper reset, like all the bad stuff got flushed out. And so I think it's very healthy that happened. And we kind of can start now with a clean slate. But if you look at the cycles, we had an 80% drop similar to previous cycles, right? And so I don't think it's out of the ordinary. But I think it was a very healthy reset. And since now I think we have a proper setup. So my reasoning has been, and maybe we can go to maybe talk a bit more about supply dynamics. Here I would like to talk about the active supply. So my reasoning is that basically practically the first 3 cycles of Bitcoin, I see it as the initialization phase. And so I talked about this in the panel in Prague with Jack Mallers, where we were talking about the monetization of Bitcoin. And to me, there's a clear difference between those first 3 cycles, because we had like a huge inflation rate, right? So 90% of the supply was mined in those first 3 cycles. And so we can see that actually in the active supply. So active supply is a purely on-chain metric. It was actually invented by Thomas Blummer. And actually Checkmate and David Poel, they have built a framework around this, which is coin time economics. It's really cool. Really credit to their work there. But I think this is a very cool metric because there's no entity adjustment. There's no bias in this metric really, and it shows the liveliness of the Bitcoin supply.
Well, let me just explain it to anyone listening as well, because they might not see the screen. But what we've got a line here, which is the growth in the price of Bitcoin, and then under it we've got how much Bitcoin is available, the available supply. And what we see up to halving 1, there's a massive jump. Up to halving 2, there's a smaller jump. Up to halving 3, there's an even smaller jump. And then we've been kind of flat to halving 4, which kind of what you're implying is this is going to start heading in reverse. This is the prices. We've got like this point in time where the price is going to continue to go up. And so therefore demand is going up against a falling active supply. That's what's coming.
Exactly.
Yeah.
Exactly. Yeah. And so this active
very
supply,
bullish.
That is, I think it's also very bullish into the future. But it can't. It's basically what we're looking at is scarcity materializing.
But does price going up not bring supply online?
It does. And so in this measurement, active supply, the active supply is actually all coins that are taking part in price discovery. So we actually look because each coin builds up an amount of coin days, but those get reset at the moment of a transaction, and so we can actually look at all the coins that are taking part in price discovery, and then we get the active supply. And the active supply is one of the most conservative measures of looking at this available supply, right? But even in this very conservative measure, because we're literally incorporating not only immediate coins that have an effect on price dynamic, but also historic coins that had an effect on price dynamics. And so even in this very conservative measure, we see that since the third halving, we've been flat. And so to me, what that means is, and it's literally the liveliness of the Bitcoin supply. So what that means is, if we're flat in terms of liveliness, it means that the illiquid supply is the growth rate of a liquid supply is such that the available supply that remains is kind of stabilizing and is and so it's scarcity materializing. And so maybe you can go to the next chart where I illustrate a bit better with this blue part. So to me, really, this part of the chart is that initialization phase. So we had like a really high inflation rate, because in the first halving, half of the coins were mined, right? Like half of the 21 million coins were mined, up until the first halving, and then the next 25% between halving 1 and 2. And so there was such a high inflation rate that there was a lot of supply becoming active on the market. But since then, we have now, since the third halving, we've been at this stage where we've had kind of the most abundant supply in history, but yet with a relatively low market cap, right? And so to me, that also is a reason why we've had such a muted top in 2021, because we didn't have yet these ETF gateways open. We didn't surpass yet the inflation rate of we didn't fall below the inflation rate of gold, and so I think now really with the fourth halving, we have really a setup that is quite amazing, because we now have all these gateways in place, and so now we just need time for these institutions to start allocating, and they're actually doing it. So we're actually seeing the evidence of that, and so and of course here we're only looking at the supply side, right? And so Bitcoin's price is the equilibrium between demand and supply. And so we're only looking at the supply side, but the supply side is looking very bullish. Of course, active coins are, or like when we have an all-time high, some of those older coins are coming back, because literally what an all-time high means is that there was never a better moment in history to sell some of your coins. And so obviously long-term holders that are sitting on enormous gains are incentivized to sell, and we can actually see that on the long-term holder supply metric. And so maybe we can still move to the next chart. So this phase, by the way, I would like to call then the more mature phase of Bitcoin, where we now see actually the digital scarcity materializing. But that is a process that takes time. And so I would like to talk a bit about that HODL behavior, because your question was a good question, Danny, where you say like, okay, if we make an all-time high, are these long-term holders not incentivized to sell? And they do. So we actually saw in 2017, for example, that they sold off around 3 million coins to new holders. And so this is the natural evolvement of adoption. And I think that is perfectly reasonable as well. We that will continue to happen, but many of those coins will get to new hands of people that also will eventually become again a hodler of Bitcoin. And so we can actually see that. And so we have two different measurements of the supply. So at one point we're looking at, so the blue line is a liquid supply, and the black line is long-term holder supply. And the illiquid supply doesn't, we don't see these fluctuations. Why is that? Well, they're different types of measurements. So in illiquid supply, we're actually looking at the spending behavior of coins, where in the long-term holder supply, we look at it's a time-based variant, right? So if you're a young or a long-term holder, that is what decides in which category you fall. And so why don't we see those drops in liquid supply? That is because by definition, if supply moves into someone's new hands, they are illiquid from the beginning until they start spending some of their coins, and then only then they become a liquid entity. And so, but what we see is that during these bull markets, we see a drop in long-term holder supply, but then eventually that supply catches up again with the illiquid supply. And so, to me, what that shows is it's just the market dynamic that's going on. But these measurements are very similar for except during these bull markets where we see these fluctuations.
It's fascinating. The setup.
Yeah. So what we've seen now is so we actually, because of the all-time high with the ETFs, some of those long-term holders started selling some of their coins, and we can see that drop in long-term holder supply. But we have already started rising again. And to me, that shows a very particular point again in previous cycles where we have seen this around the second halving and around that 2019 part of that was a 2019 cycle where we actually reached 14K at some point in the bear market recovery. We also saw that same thing happening, right? And so it's not out of the ordinary now. And so to me, it looks still a very reasonable setup to have a continuation of that bull market. And so, we've now looked at several ways of measuring this HODL behavior. So we've looked at long-term holders, we've looked at active supply, we've looked at liquid supply, and all of these kind of show a similar view. And that is that, illiquid supply is starting to outpace the supply issuance, right? And so we now, I've showed this chart as well in our previous discussion, but now we've closed the third halving, right? We've passed the fourth halving, and we actually see now that in that past halving, we had 900 coins a day on average added to the circulating supply, but 1,500 coins a day, so 3 times as much to a liquid supply. And to me, so this is again why I see this third halving as this inflection point where we've kind of reached this more mature stage of Bitcoin. But yeah, as I said, in the 2021 bull market, we didn't have the gateways yet. It was more difficult for institutions to come in, but those things have been fixed now. And so that makes me quite optimistic about the future.
Yeah, I'm going to be really interested to see this chart in 2 more halvings.
Yeah, exactly. Yeah, I think it's going to continue to, put pressure. Like, I think the available supply will keep shrinking. And so that was actually the theory of the HODL model, right? So I tried to model out this illiquid supply growth. And it's actually not the illiquid supply that matters, but it's the supply that remains that matters, right? Yeah. So we want to look at the growth rate of this hodler group, because that has a direct effect on how much supply will remain available for trade. And so we can see, like, as we project that into the future, and this is a very conservative measure, we see actually that available supply shrinking into the future. And so maybe in the next chart, So there is a more optimistic model. This is a bit more easier to see the result. This is a very bullish model. I mean, I'm not implying that this will hold, but this shows kind of this S curve of adoption, right? Where we have this illiquid supply growth trend up, and then so the available supply will trend to zero. Obviously, it will never be zero, because Bitcoin will be used as a medium of exchange, and so there will at some point be like this second inflection point where that available supply for trade will as well stabilize.
This is hyper-Bitcoinization.
That is actually hyper-Bitcoinization.
Yeah. But it's hyper-Bitcoinization, not actually a liquid supply growing. Because like there you have a liquid supply at like, I don't know, 300,000 coins or something. But if all global trade is settling in Bitcoin, surely the actual liquid supply is going to be way, way smaller.
Yeah. So with the growth rate of a liquid supply, so if you think of Bitcoin being used as a store of value, which is really because what really the monetization of Bitcoin actually also means the demonetization of other assets, right? Real estate, which is now used as a savings account practically, will be demonetized, and some of that money will flow into Bitcoin. The same is for bonds, stocks, and so a lot of that. So the monetization, where like the capital that is now placed elsewhere, will be stored in Bitcoin. And if we, simple example, if you think of a billionaire, like how much of his wealth is actually stored versus how much is used as a medium of exchange, like most of it, like probably 95% plus is stored, and so it would also make sense to see that in the Bitcoin supply eventually. Therefore, also my reasoning in terms to the adoption of Bitcoin is mainly Bitcoin as a store of value, then Bitcoin as a medium of exchange, and then as a unit of account. But thinking about Jack Mallers, I spoke to him backstage. I really respect the guy because he actually found a way to strip away volatility and use Bitcoin currently already as a medium of exchange. And so that's really cool, because that's really speeding up the adoption of Bitcoin and using Bitcoin already as a medium of exchange. And so obviously, in the general line here, I think still it's like store value, medium of exchange, unit of account. But yeah, I already use Bitcoin as a unit of account for my network. And so I'm also using it as a unit of account already. And so we have a bit of, it's not necessarily exactly in that order, but in general lines, I guess it is.
That's a really interesting point, actually, when you talk about unit of account, because I don't really, whilst we accept Bitcoin across everything I do, football, podcasts, or whatever, the dollar is the unit of account. And whilst I kind of know I'm living on a Bitcoin standard, I hadn't realized I'm essentially using Bitcoin as my unit of account for measuring life.
Exactly. Yeah, I do too. And so, and I think many Bitcoiners do. But, if we think about all the people in the world, the majority does not, And so, so I think mainly what it starts out with is the store of value. Then we're going to be more incentivized when the volatility is becoming less over time. We're going to be incentivized to use it more as a medium of exchange, and then it's also easier to start using it as a unit of account. But so my respect to Jack in terms of like he found a way to actually strip away the volatility by solving a real world problem, remittances, and sending from dollar to dollar amount, and but using Bitcoin as the backbone for a medium of exchange. And so I think such an application is what speeds up Bitcoin, and it's very difficult to find those those tools or problems to find an application there that to speed up the adoption of Bitcoin. So and you're doing it as well in a way, Peter, with your football club dragging attention to Bitcoin. And so respect to that, like that really it puts Bitcoin in the picture always, and so it really does speed up the adoption of Bitcoin. You're building Bedford to be like the Bitcoin town of England, and so it's that is awesome.
Yeah,
I'm literally the king of Bedford, right?
Soon to be the mayor of Bedford.
Soon to be the mayor.
Exactly. Yeah, the mayor of Bedford. That would be awesome.
You're being nice, Root, but I'll say it. The power law thing is nonsense.
Don't, Danny. He'll come and get you.
Yeah.
Freddy Krueger will get you in your sleep.
Yeah, well, I respect creative models, and so also with the stock to flow, I mean, even if it's not a very useful model, it was a very creative way of looking at Bitcoin, and so I love the creativity about these models. So respect there.
What is the status of the stock to flow model right now, Danny? Are we back on track?
I have no idea. I'm sure he's claiming it's back on track.
I'm gonna have a look. You guys carry on. I'm gonna get up here.
All right.
The conservative one is probably on track, but yeah, as I said, I don't believe that much in the usefulness. I think without a model, we can all agree that Bitcoin will eventually reach 1 million. But so I prefer to look at day-to-day data and where are we now and what can we expect in a medium term rather than in 2 cycles.
Bro, we are right online in stock to flow.
We're back.
We are back. We are fucking back.
Yeah. So again, when it comes to Plan B, he's a fellow Dutchman, by the way. I respect his creativity, but I think there was fair critique on the stock to flow model, and yeah, I think he kept on pushing it rather than.
We are back. Listen, no one was whinging about stock to flow back in 2014 or 2016 when we were above it. They only complained when we went below it. But we had that massive sell-off. I mean, we had, some issues in the market.
I'm pretty sure that light blue line is new, the one that it just very, very ever so slightly touches on the bottom.
You just didn't notice it before.
Yeah.
Look, we are back on the line.
All his models are broken.
We're going back.
Supposedly that should be 2 standard deviations. So I think that the darker blue is a standard deviation, and then the light blue is 2 standard deviations from the model. But yeah, indeed, nobody was complaining in 2014 when we were, way over 2 standard deviations in the peak. No. But everyone is complaining when we're 2 standard deviations at the bottom.
Fucking
right?
Heathens. We are back. Stock to flow is back. We are going up to, that says to me about $600,000. I'm here for it. Love you, Plan B. Plan B.
Yeah. But yeah, I think the available supply is shrinking, but that doesn't mean that long-term holders won't sell when there are new all-time highs. But I still think the general trend will be that, the available supply, like scarcity, will materialize into the future. That might go fast, it might go slow, depending, so far we're below that HODL Model S, which in my opinion is kind of too optimistic. But yeah, the HODL model variant is relatively conservative, and so maybe we'll go somewhere in between those 2 models. But yeah, to me that looks like an optimistic future because we're below the inflation rate of gold. We had now the ETF gateways are open, so institutions can actually start allocating to Bitcoin, and I think that is important for the adoption because if we think like how are institutions and countries going to adopt it without those gateways open? We cannot expect from day one for them to understand the Bitcoin ethos, but it's cool that they are getting their feet wet and that they, that it becomes a percentage of their portfolio because now that track record is starting. And I think in a way it will be similar. Why are so many people using real estate as a savings account? That was also something that didn't used to exist before the fiat standard, but that was also really people do it based on experience, right? Like, so you buy a house and then you see like, hey, this was a good trade, or this was, that was actually a good idea. And so people start to copying that and people start to do this. And so I expect the same thing now to happen with Bitcoin. The track record is starting now, but that real life experience of that upside potential of Bitcoin in these portfolios is only starting now. And so that needs time. That's why maybe even it needs 10 years to really show that performance. Just like El Salvador, which was very early in adopting Bitcoin, got criticized a lot during the bear market. And but now they're coming out strong and they look at it as an example. And possibly other countries are following, like hopefully Suriname, which used to be a colony of the Netherlands. I don't know. Have you had Maya on your show, Peter?
Nope. They've just announced they've got a Bitcoin football team there, haven't they?
That I don't know about yet, but
so.
possibly. Okay, that's the news you follow. No, I've been tracking Maya she's running for president, in Suriname, and she wants to get the country on a Bitcoin standard. And actually, there's reasonable chances, in my opinion. So that's
there we go.
That's pretty interesting.
It's coming.
Mm-hmm. Yeah, and so instead of looking at models like power law, stock to flow, as I said, like I prefer to kind of look at the current state of the market, and so I prefer not to really project into the future, but look at where we are now, and that's why. For example, with this on-chain value map, what I've tried to illustrate is by actually incorporating the flows, the capital flows into Bitcoin and the available supply that there is for trade, we can create these bands, and we can currently see that we're not at the red band, right, which is like really heavy overvalued, and that red band is actually sitting at 140K more or less. So that's why also I think. Like a cycle peak would, because that's even trending up. So is from those prices onwards. But yeah, the question is, when will we reach that red band? Maybe we won't reach it this time because institutions need longer than usual. That might happen as well. But so far we're really on track. And if we look at the all-time high supposedly that we made, that was only at the overvalued level. And maybe you can still go to the next chart. I drew some arrows there. So to me, that really points to those previous arrows where we all touched that overvalued level, and then we had some consolidation. But in previous cycles that wasn't an all-time high, but this cycle it was an all-time high because we had this muted top in 2021.
It's a little test.
Yeah, and so
I love that.
So how far is the downside? To me, if you look at the second halving, so we reached actually that overvalue line, and then we went back to fair value, and we kind of grinded upwards. In 2019, we actually reached that top of 14K there, and we again touched that overvalue level, and then we dropped to the undervalued level, and then with Corona we even dropped to the heavy undervalued level right before the third halving. The reason why I think we dropped quite significantly there is like in 2019, what was actually going on was we had, I don't know if you remember Plus Token.
Yep.
Plus Token was this Chinese scam, right? But actually, they bought around 200,000 Bitcoin during that move up. So that was really a similar demand of the ETFs that we currently have. The 200,000, we literally moved up 200,000 from their holdings from 600 to 850. And the difference now this time is that I think this is not a scam, right? We have actually a stronger base. It's actually, it's 80% retail and 20% institutions, but they're not likely to sell all of their coins or something. So in 2019, we saw like a quite severe drop. But in my opinion, this consolidation will likely be more similar to the second halving because of those reasons. Yeah, and so this is the last chart. This is something I've been working on as well. I've shared it with my followers some time ago already. It was a fairly hot topic at some point. The Bitcoin multiplier. I don't know if you've heard of it.
Yeah.
At some point everyone was talking about it, and they were many times referencing it because there was a report from Bank of America where they mentioned like this 118x multiplier. So for each dollar you invest, Bitcoin would move up $118 supposedly. So that was a very bullish, multiplier, which obviously got a lot of retweets. But Glassnode did some studies, and they actually came with a lot more conservative measure. They averaged it out over the whole history, and then you only get like a 4x multiplier. So it's quite a difference there. So what have I been doing? Yeah, I've been thinking about this for some time, and I came to the conclusion that it's actually best to look at the multiplier in terms of inflow and outflows, because we can actually, at a certain moment in time, inflows have a different impact often on the market than outflows at another given time. And by mapping it in this way, we actually see this cyclical pattern occur And so the green line is the inflow multiplier. And so at the bottom of a bear market, that is very high. So we have actually a very high inflow multiplier at the bottom of a bear market because there's not that many inflows. So the price is quite suppressed, and obviously with like little capital, it can then push up relatively high. But then the more and more the Bitcoin price starts rising, the more pressure you get, the more capital you need to rise even further. And that's why we actually see during a bull market the multiplier trend down. And so we actually get to a multiplier of like around 10 or so around the peak of that bull market. And then we, if we move into a bear market, this multiplier again starts moving up a lot because obviously the inflows stop, and then that multiplier starts moving up. And so we can really see that cyclical pattern here. And so with the ETF approval, we have been trending down, but then we started, with this consolidation, we started trending up. And that made me very cautious because that indeed meant like, oh, maybe we will get a bear market here. But since then, we've again moved down, and it seems like we're really moving down again. And to me, this means that it's quite likely, as we saw in 2019, we also moved up and then back down, that we are in this phase where, again, this multiplier will start trending down as more and more capital starts moving in the market. But that will take time. So So anyway, I would love comments on this as well from other analysts and other people. But I thought it was a pretty creative solution to look at this multiplier.
Yeah, definitely. Well, listen, look, Danny isn't bullish enough.
Okay.
I'm feeling pretty bullish. Enough.
Yeah, I don't know, man. I'm used to you being more bullish, Danny.
Well, this just made me think that there's a lot longer to go in this bull market.
Yeah.
I'm very bullish, with this Prague conference just behind us. I met so many creative people, so many intelligent people that were working on Bitcoin and on Oster. It really got me bullish again. And so yeah, I loved the tech vibe of that conference as well. They
do a great job.
It was really nice.
Big shout out to Mateus. They do a great job.
Yeah.
I couldn't go this year because I'd just been out to Oslo Freedom Forum, but I went last year. It's brilliant. They do a brilliant job. Caraman, listen, love this. Thank you. Appreciate you every time you come on and show us and update your charts and put the context in. It's
Thank you so much for having me. Hopefully it was useful. Yeah.
We will chat in 6 months at the start of the bull market.
Let's do that.
Let's do that. All right, brother. Appreciate you, Danny boy. Thank you, my man.
Thank you,
everybody, for listening. Ciao.